And good evening, Marcos, Lees, and Old Man. How you guys doing tonight? Two brain cells. How you doing tonight? Yeah, just so you guys know, we do have a guest with us tonight. We've got Eric from Secret Code Podcast. All right, I fly a bus. Glad you're joining us here in Des Moines. I mean that's we do kind of wish that we had known you were in town because yeah, you could have sat back and watched the show with us live. Next time, let us know. And two brain cells. Did you use Flexa to pay for your Chipotle? Inquiring minds we've got to find out the answer to this question. And Osaid, welcome to the show from Minnesota. Okay. So you used cash. Probably the best call you could make on that one. Oh, no, old man. It's not party time yet. We've got plans for an actual, we've got plans for an actual party the first weekend of June. Someone's going to get a spanking. I'm just saying.
Ladies and gentlemen, boys and girls, cats and kittens, welcome to the Podcast Live. And that round of applause is for all of you. Thank you, thank you, thank you for joining us. The Podcast is your home for rational crypto news and objectivity, leaving emotion at the door and talking about what we like, why we like it, and where we see it going. We are not offering financial advice. We are telling you what we do, and that is all. We don't slow down. We don't let up. Full speed is our only speed. I am your host, Scott, pragmatic investor, who has won. I got to say the pragmatic part first one more time because I keep getting some ugly comments. Pragmatic investor who has won and lost fortunes, and joining me as always is the greatest producer of all time, Belle. How are we doing tonight, Belle?
I'm having a fantastic night. How are you tonight, Scott?
You know, I'm going to let you know after the monologue. After the monologue, I'm going to let you know how I'm doing. Here at the podcast, we have a tendency to talk about what others are not talking about and bringing the focus on to use case cryptos because, as we know, these are what drive the market and bring innovation to a world that desperately needs it. The status quo is no longer acceptable, and it's time for a technological revolution. Jackal, Hydro, welcome to crypto and welcome to the podcast. And you get one more round of applause because I have so much love for you guys tonight. So I'm wearing the Flexa t-shirt because I couldn't figure out what I wanted to monologue about. So I said, you know what, let's talk about the whole AMP, Strike, Solana Pay, the digital pay rails, because it is still a fascinating subject for me, and I'd love to discuss it. Now, everything I said on the AMP video, if you guys got a chance to watch it, every single thing I said, I believe to be true. I am not the oracle on the mountain. I'm not the guy. What I say is absolute fact, and there you go. I've never pushed myself off on that, and I think it is the just absolute gross egotism of anybody who does, because one thing about crypto that is universally true is none of us knows what's about to happen. We have no idea what's about to happen. You can make educated guesses. You can make educated, inferences, but we don't know. Nobody knows. That thing can go up, down, or it can hold. One of those is true. Now, because I said that, I am, in fact, the oracle on the mountain because, look, Scott was right. It held. Scott was right. It went up. I'm trying to be careful here, guys. And it's for things like this. And that's the reason that we're going to be firing up the Podcast University. More information as we get closer to it. But this is going to be something that just doesn't play well on YouTube. We're going to try it anyway. And that is just fundamental philosophical trading, investing, smart money, all the stuff that we've been talking about on here for a good year. But for some reason just gets dusted off. Emery fired it up and he said, I want to do it. So we're going to be doing that. And the reason that we're doing that actually has a lot to do with the monologue and what I'm talking about right now. So digital pay rails, I'm a fan. I think we need them. I think it's great. Anything that advances this project, I think is wonderful. Here's the problem as I see it, and I believe myself to be correct. You don't have a consumer for this product. Let me say it one more time because I want to make sure this sticks. There is no effective consumer for this product, any of them. It doesn't matter. It's not Flex. It's not an ACH. It's not Solana Pay. There's no effective consumer for any of them. And let me illustrate why. I'm not going to spend my crypto. I'm just not. All right, I didn't buy it to spend it. Now, one can make the argument for stablecoins. I've made the argument for stablecoins. But here's the problem. If you go over to Terra, and if you go to a little system called White Whale, I will show it to you. No problem. You're collecting 19.5%. Actually, it's up a little bit. Let's call it 19.6% on your UST as a single asset. You put it, they give you 19.6%. They're a lending platform. You're providing them capital to lend out, and in return, they give you 19.6% on your stablecoin. Now, anybody's listening to this program is at least a somewhat more advanced investor. I'm not going to explain stablecoins to you. You understand what they are. They're worth $1. 6 months from now, they're worth $1. 2 years from now, they're worth $1. Now, we can dig into purchasing power, inflation. Anything pegged to $1 is going to be subjected to the whims of the dollar. We can have that argument, but it's not right for this discussion. your token is not volatile. It is no more volatile than the US dollar. Again, I'm not going to get into that, but I'm sure you understand where I'm going with this. You can put that in, and the daily fluctuations, the mass volatility that attacks the crypto market over and over and over. If you've been in more than a day, you know what I'm talking about. You are not susceptible to that. Your balance is secured. It's worth $1, and you're collecting 19.6% on it, auto compounding. Now, for those who don't know what that is, that means you don't have to touch it. It's fire and forget. You put it in, you never have to go back. The money that is earned on that is put into the balance, and now your balance is bigger, so you are earning more. It becomes exponential. Time is on your side. Just let it go. All right, 19.6%. So for me to be incentivized to spend even my stable coins on a digital network, I have to get a better rate of return than 19.6%. I have to earn more than 19.6%, or there is literally an opportunity cost for me to use the Spend app or Solana Pay or ACHP. It costs me more to use it than I'm getting back for it. So for me, it's a non-starter. I might do it. I might go to Eric and say, here, Eric, hold my beer. Watch this. We're going to buy ice cream, and we're going to pay for it with Bitcoin. I might do that. But I'll do it once for the shtick, and that's it. So what I'm trying to get across on this is that the bulk of the crypto investors, I'll never say all. Anytime anybody says everybody or all, that's propaganda. All right? That's propaganda. That is the rule of unanimity. Please look it up. So I don't say that, but I think I can make an educated, somewhat informed proclamation and say that the bulk of the crypto investors, the people who got into crypto, didn't get into crypto to spend it. They got it as an investment. Utility tokens, they're not going to spend utility tokens. They may spend stable coins, but for the bulk of them, it's because they've never heard of White Whale. They've never heard of a single pool that will hold UST that will pay you 19.5%. These are new. They haven't heard of them. When they do, they're not going to spend their stable coins either. So let's look at the rest of the world. The other 86% of the world that doesn't own crypto, doesn't understand crypto, is not going to go out of their way to buy crypto so that they can spend it. It's fee upon fee upon fee. So between those two elements, there's about a 2% gap. That's what you're building your market for, because the consumer that you're building this for has not been created yet. It just hasn't. Now, I'm more than happy to hold a token. I like to look to the future. I love 30,000-foot view, and I love to push it as far as I can. I do look for value like that. However, for the ones right now, the opportunity cost for me to hold these tokens is just too high. It's nothing personal. It is absolutely nothing personal against the product itself. It has everything to do with the opportunity cost. If I'm only earning 4% while I wait, the opportunity cost is too high because I can effectively earn 20% on the stablecoin version of it. So we all seem to be in agreement that these are very long tokens, long, years. So when you are doing your opportunity cost, you have to factor this out over 365-day epochs. It's a long run. So even if the token might spike 10%, and drop 8% the next day, but even if it has that little steady rush, which that's all we're looking for is a slow organic growth, it has to combat what I can earn with that on a variety of other networks. You guys haven't even heard of Hydro, but you're about to. And when you hear of Hydro, you're not looking for opportunity costs of long tokens. It's past you now. It is not in your interest to do so. So as much as I love these things, until I see a path from A to B to C, until I see them pushing the education, literally building the consumer, because right now they haven't, building the consumer and incentivizing the hell out of said consumer to use these networks, I see a problem. Now, fortunately, I'm a tiny little nub of a YouTube channel. I don't get a lot of views. We don't get a lot of people on the live streams. I have so much love for everybody who joins us on these things. But the size of my channel does not negate the strength of my argument because I believe it is fundamentally sound. Who are you building it for? That's it. That's my only issue that I have with these pay rails. If the opportunity cost wasn't so high, I would be in each and every single one of them. I do believe it's the future, but it is the far future. So the money that I am hemorrhaging as I am waiting it out, it's just not in my interest to do so. That's it. Other than that, I have zero issue with any of them. I hope they are all wildly successful. It's good for me. It's good for the world. It's good for the market. It's good for everything. I don't root against any token. None of them. I hope they are all wildly successful. But I have to see a path for them to be successful before I invest in them, and that's really all that comes down to. So let me go to third screen and see. Oh, look, I saved the monitor here. Belle, that's my monologue. Do we have any questions, comments, concerns, or observations?
Oh, yeah. We
Do we?
got a lot.
What a shock. Okay, let me have them.
We've got a lot. All right, old man, I've got a question. Will the YouTube wallet be used to buy a studio? Laugh out loud. I'm already buzzed.
Wait a minute, say that again. Will the YouTube wallet? Oh, I know what you're talking about. Eric, I don't know if you've been following the channel, man, but I started a YouTube wallet and I funded it with $2,500. I started that wallet right around early December. It currently has a value with everything that's spread out on it of about $21,000. So in the 4 months that we started that wallet, we effectively 10x'd it. So the question that he's asking is, am I going to pull all that money out to build a studio? We've been talking about it. So, old man, to answer that question,
2 more 10Xs away.
2 more 10Xs away. How much would your dream studio cost, Eric?
I'm living in my dream studio right now. I've got a green screen, a mic. What else you need?
That's all you want? Dude, I want to blow it out, dude. I want to put monitors behind me, with the big podcast logo. I want to stand at a desk with the David Letterman style microphone. I want to wear a coat and tie. I think I would look great in a coat
I want
and
to add
tie.
another door between my door and me, so when the kids are pounding on one of them, that I just don't hear it as much.
You can cover it with egg cartons.
Then I'm good.
Belle. All right, Belle, take it away, please.
All right, next comment coming in from Microman. Literally turned the TV on to hear someone's getting a spanking. I mean, those member benefits just keep improving, right?
I guess. Should I give him a round of applause for that? Very good question. Thank you. Belle, please carry on.
Next one also coming in from Microman. Does this mean Flexa are completely uninterested in any real world applications like real estate, the kind of asset agnostic collateralization we used to talk about?
Oh, I'm a huge fan. Honestly, look, I've talked AMP to death. I've talked Flexa to death, and I'm more than happy to continue doing it. I think the model of AMP, I think it is as close or near to perfect as a token can be. I think it's excellent. There's nothing in that white paper that I disagree with. The only problem that I have with it is management. It really is, man, because I think that the idea of this is being misused. Pushing it into crypto. You guys heard the monologue. You know where I stand. Who are you building it for? All right. Who are you building it for? So you either take this product and you push it into the DeFi where crypto is currency. It is the only currency. We don't push dollars back and forth here. All right. We push tokens back and forth here. So if you want to build your product where it is actually going to be used right this second, it's the DeFi. But we all still insist that people are going to line up and use their scale to pay for gasoline, and I don't see it. That's all it is. Man, the hell do I know? What do I know? But I just don't see a path for it, and that's kind of where I am. But yeah, real estate transaction, escrow, I could definitely see it being strong in that. But are they pushing it that direction? Because I'm not seeing that. I'm not seeing anybody do that. But if anybody could, AMP would be the one to do it. Belle, please carry on.
Omar, if you can get your paycheck directly into UST, USDC, etc., then you could spend your crypto instead of saving it as an investment because you've got to pay bills.
No, absolutely correct. Absolutely correct. But it's going to come back to how am I incentivized to do so? I'm sorry, man. Look, I use credit cards for everything. I use my standard old credit cards for everything because I get cash back, period. That's it. Now, I understand that if I use a digital pay rail, I'm going to save the merchant 2%, 2 to 2.5% per transaction. But is that merchant going to refund that value to me? Are they going to give me the 2%? Are they going to lower the cost of what I'm buying by 2.5%? It's great, man. Look, these things are great for the merchants, but the merchants aren't the ones using them. I'm the one using it. Bell's the one. Eric's the one using it. How are you incentivizing us? Because that's what I don't hear a whole hell of a lot about. And not to sound materialistic, but I'm in this for me. All right, I'm absolutely in this for me. If it does the merchant, if it helps the merchant, that's the cherry on top, but I got to look to me first, man. So if I'm going to get cash back on a standard credit card, but not on my my digital, and you know what, I understand they're all digital rails, but let's call it the crypto rails. If I'm getting no incentives from the crypto rails, why am I going to do it? I mean, that's it, man. We're putting opportunity costs, taxation. We're putting every single taxable event every time you spend crypto. And where's my incentive? So I'll just leave it there. All right, Belle, we got one more, and then we're going to Eric.
All right. Well, you actually just jumping in, but you got a total of a +7 for your monologue from Microman and Old Man.
Did I get a +7? Thank you. I wasn't ranting, total. Guys. I wasn't losing it. I was just putting it out there. All right, ladies and gentlemen, allow me the pleasure of introducing to you. This is Eric from the Secret Code podcast. Anybody who's been familiar with Secret Code, Eric gets some great guests on there. He talks it up. He gives really, really good interviews. His quality is great. He is a friendly guy. We're bringing him on here because he's going to tell you about the next big thing. Now, Eric and I have been talking this thing up, and you guys know how I do interviews, man. I hammer people. I absolutely hammer them because my interest is you. I'm not doing this for me. I'm not doing it for – I can call Eric. All right, I got his number. I can call him and ask questions, but it's not about that, man. The information that we're getting out of this is for you, is for the podcast, the members. So you guys usually see me hammering away, but I ran into a little problem on this one, man. I couldn't find anything to really hammer them on. I think this is very well thought out. I mean, they have taken a lot of mistakes that have been made in crypto, and they've kind of figured that out and said, yeah, we're not going to go that way. We're going to go this way. But that's enough of me. We're going to bring Eric. You get the floor, Eric. When you are done plugging the hell out of your product, I'm not asking you questions. The audience is. Are you cool with that?
Absolutely. Anybody can hammer me. Bring it on.
Take it away, sir. You got the big screen. It's all you.
Scott, thank you so much for having me on the show, dude. So, yeah, I'm going to talk about Hydro Finance a little bit. Which is the new AMM that is replacing Secret Swap. Your CeFi will migrate over. And a lot of what you were talking about, you're completely spot on when you're talking about incentive structures and how are you going to really capitalize on things and people aren't considering their audiences or how to sustainably capture value. You're exactly right. And what me and my team did is we looked over all AMM models, and the entire crypto community is coming to the realization that they don't work. AMMs don't work. They don't make any sense. And we fixed it.
Okay, Eric, how did you fix it? Come on, man. Dazzle me.
So, current AMMs need a high price for their token in order for it to have high APRs. They need these high APRs in order to get people to come provide liquidity. And they need that liquidity in order for people to be able to trade and use them at all. So they have to have this really high token price. And kind of the going theory is, someday we'll generate enough fees to justify multi-billion-dollar valuations. You're going to make enough fees from traders for that?
In the DeFi.
I mean, if the fees were high enough, then that would hurt the users and they'd go to a different platform. And if the fees weren't high enough, then you're just not going to generate enough revenue. It doesn't make sense. The tokens for these platforms don't make sense. And so you're seeing people try to solve them. I mean, Uniswap's the only one that's gotten by without the token, and they've got a ton of volume and like a little bit of liquidity comparatively. So like the ratio for it's 2.5 to 1, but that means that the rewards from the trade fees aren't being spread out all that much. Whereas something like Sushi Swap, then it's 5 to 1. Osmosis, then it's 18 to 1. So now you should be making 1/8, 1/7 of what people liquidity providing on Uniswap make, but they also have lower fees, so it's even less than that. Plus, they have to incentivize node operators because they're a layer one. Like, none of these work. And so new solutions are coming out with like concentrated liquidity where you don't have the full, I don't want to bore you with all the math of how the AMMs work. That's more my thing. But what we did is we figured out how to make revenue. And it's right there in front of everybody's face. And everybody wanted to do it. And we figured out how.
Okay.
And that's what we're building.
And now I agree with you, man. It's the unspoken thing that we can't do on here, particularly anybody who's near osmosis, who's near Cosmos. Thou shalt not speak ill of osmosis. You can nod your head. You know I'm absolutely right. Thou shalt not speak ill of osmosis. Now, fortunately for the little podcast program here is that we're beholden to nobody. Osmosis has a problem. All right, it is going to have a problem. There is a reason, podcast members, that I am pushing Terra videos. There is a reason that I am talking about these other dexes the way that I'm talking about them, because if anybody wants to sit down and actually do the math, you're going to see that there's a problem here. All right, a little bit of it. Now, I'm not going to bore you with it because we're not here to talk about that. We're here to talk about Hydro. So, Eric, how about this? Tell my audience how they're going to make money with your platform. Take it away, sir.
You got it. Same way you make money on osmosis, except it's not going to go away and no one's left holding the bag. We have codified buy pressure and actually set up a way to eventually not need liquidity anymore from external users because we have our own.
Nope. I'm not letting you off on that one, man. How are you going to run this with no liquidity? Who's providing the liquidity?
We're going to own it, dude.
How are you going to own it? How
so much revenue. So much revenue that we're going to own it.
How are you going to capture this revenue, man? Look, how about this? I'm going to pivot this. I was going to let you go, but I'm going to pivot this. How are you going to make me money? Tell me that.
Okay. So you're going to provide liquidity and you're going to earn Dro. Yay, Dro, another farm token. That's fantastic. What's so special about Dro? Well, the primary liquidity provided on Hydro is going to be in staked derivative assets, meaning that the protocol itself, the Hydro DAO, earns staking rewards in all the layer ones we support. Mm-hmm. So we're earning Secret, we're earning Jackal, we're earning Atom, we're earning Luna. You can stake Dro to earn Secret. You can stake Dro to earn Luna. You can stake Dro to earn Atom. But most of these staking rewards remain as protocol-owned liquidity, meaning that it's owned by the DAO itself. So our liquidity keeps going up and up because we own it. And it's not even coming from external providers anymore. Now we have high APRs because we're giving out the token, so we're going to need a bunch of external providers for a while. But as we earn our own, eventually, someday, we just turn off inflation. And then their APRs go to zero, and all of our liquidity providers leave. And we don't care because we have $1 billion of liquidity already that's still going up because we're still earning rewards. And there's still codified buy pressure of the Dro token, and there's still stake Dro to earn these other layer ones. You just can't get any new Dro. It's fully deflationary at that point. We actually have an eventuality where it's just fully deflationary.
So it's going to be more in my interest here to stake as opposed to LP. I'm going to LP at the beginning, dude, because for a good product with a good APR, daddy's in. All right? Mm-hmm. That's all you got to tell me. I get it, man. I'm an early investor, and I love being one. But as this progresses, it's going to be more in my interest to stake as opposed to LP. Is that what you're saying?
Do all of it.
No. I want you to tell me what I should be doing 18 months from now. All right, dude? I'm 30,000 feet here, man. What I do today doesn't matter. What I do 18 months from now does. Where do you envision this in 18 months? Where should Scott's money be?
The same place it should be in 6 months, and that is doing all of them in your nice little set it and forget it way. Where, say you like Secret and Atom. So you liquidity provides Secret and Atom, and you throw that in a really cool yield optimizer. Mm-hmm. And so you're earning, I don't know, maybe 80, 100% APR, something small like that. And then you're taking those rewards in Dro, and they are automatically staked in another farm. Like, this is all taken care of automatically. Where now that Dro, where that Dro is earning you more Atom. And then that Atom is being added automatically for you. You don't have to do anything. To our Oxy pools, which is our 1-to-1 slippage list trade swap. This is how we make this work as liquidity, which is earning you even more Dro, which is being added again to earn you more Atom. All of this is happening completely automated. So you're earning the 100% from the atom staking, then you're earning another like 10% from the Dro staking, and then you're earning another like, I don't know, 5-6% on for the little bit extra. And all of it's completely automated APY. You don't have to touch it.
Let me ask you one, man. How'd you get the zero slippage? Because nobody's gotten it yet, man. How did you get the zero slippage?
Zero slippage is the easy thing. Making it sustainable is the hard thing.
Okay.
You want to know how we make zero slippage? We force contractually, we make the swap 1-to-1 no matter what. So then the hard part is, how do you make sure the pools don't deplete?
How do you?
So we have to do a couple things. We have to incentivize people to balance them, and we also have to protect them against bad actors. So I came up with a nice exponential trade fee. Your average trade fee, a balance pool, is like 0.055, 0.06%, much lower than a regular trade. If you're balancing the pool, it goes as low as 0.03%. And as you're unbalancing the pool, it goes as high as 100% when it's about 94.2 to 5.8. So when the pools are completely unbalanced, the fee's 100%. You can't use it. When it's 70-30, the fee's 0.3% if you're unbalancing. It's still about like a normal trade fee, but you're hurting the pool, so it's protecting you, or protecting the pool from you. But it literally would cost you everything to hurt these pools. And you can slow them down. You can get it to 90-10 if you want to pay 13% of the trade fee. But you're only going to slow it down for a while, and 100% of that fee remains in the protocol as protocol and liquidity. So you have to pay us to hurt us. But then why are people going to balance the pool? The whole reason derivatives haven't been used before is it's impossible to get people to sustainably change from the derivative to the native asset without the unbonding period. Why mint why buy the derivative when you could just mint it? The trading only goes in one direction. We have cash back. We're calling it hydrate to stay on form with hydro. And okay. we'll pay you 0.07, 0.08% of your volume, which means most of your stable swaps are actually paid for, but specifically balancing the pool is profitable enough that you can run all your arbitrage bots you want on them.
What tokens are you going to be offering on here, man? I'm not offering a specific, and I assume everything on CeFi. What else are you going to offer over here, man?
Not necessarily everything on CeFi. So we're going to be focusing on the Cosmos ecosystem far more than we did on Secret Swap. Secret Swap focused on catering to our Ethereum and bridges, our BSC bridges, and those don't make us revenue. We are going to run this properly as a business and cater to what pays us. We want Jackal, you see with Jackal, you see with Alter, we want adoption to happen in crypto where we branch out beyond just what's going on in crypto. We're tired of all the meta. Oh, we're all in pre-money valuation. Our white paper will get into how we're breaking past pre-money valuations to get into sustainable models. But we are going to cater to Cosmos L1s. You can get your Atom. You can get Jackal. You can get Secret. You can get Luna. You've been showcasing a lot of Luna and Terra stuff. If you really like Luna and Terra stuff, you're really going to like us partnering with them.
I'm taking the big screen here for a second because I got a serious question for you here, Eric. You're going after Osmo, aren't you?
We are poised to be a nice solid number 2. Osmosis creates an ever-loving ton of value. Osmosis captures none of it. If Osmosis had our tokenomics, no Osmo token, or say we had Osmosis's we had their liquidity for their top 6 most liquid assets that are not the Osmo token. Just looking at like Atom, Secret, and Persistence is on the list. We're making $230 million in revenue per year. They're making 0.
And that's why we've had this discussion so much. And guys, look, I'm taking the big screen again here, guys. Look, we have a lot of these discussions offline, but again, thou shalt not speak ill of osmosis. But I think anybody with a pad of paper and a pencil can probably do the math and figure out how are you going to sustain this without external money pouring in. And eventually, that external money is going to run out. So they either try to grow their way out of this, but how are you going to grow your way out of this with a zero-fee model? It's just not sustainable. So either they bring on new L1s and you have to VIG Osmo, meaning that we'll bring you on, but we need $25 million to support your product. You either do that or I don't know what the or is. That's kind of the problem. And that's what I talk about with Emery, what we talk about with Eric is that eventually that spigot's going to run out and we haven't figured out what's next. So It kind of sounds, Eric, like you also agree with that and are trying to maybe conceivably possibly be what's next. I just want you to go on record and say, yeah, that's what we're doing. But you guys are in L2, right?
Yes.
Okay. So is everything? Are you in L2? Who are you built on? Are you built on Secret?
We're built on Secret. We didn't have to be. We actually toyed with the idea of building out on several other chains.
Yeah.
We're not just something else that also needs to be private, but we can be private, so might as well have that be one little extra.
Well, I'm always going to default to privacy, dude. I'm willing to pay for it. I am absolutely willing to pay for it in trade fees. If it costs me, 24 cents more per trade fee, and nobody knows that it happened, how could I not? How could I not take advantage of that? Because I'm a guy that likes to mind his own business. So I'm more than happy to pay for that concession. I have no issue with it. I'm not speaking for anybody else. I'm merely speaking for me. You're looking down, dude. Are you reading comments on my stream? You stay off that.
Yeah,
all right, I got a
off with the
producer
comments.
for this, dude. I got a Bell that takes
Fine.
care of this. All right, we'll come back around to it. Bell, do we have anything? Because I didn't glance, but I've seen that text going up and down. They got some questions for Eric?
There is a lot of questions actually, and
Take it
I'm
away.
gonna go. All right, so I'm gonna read these from bottom up, just so you guys know. Be patient. Microman, will the same validators be on hydro as on osmosis? Can I move my staked Osmo, for example, straight onto hydro without unstaking?
Boy, what a good question.
So there are two questions locked up in there. First, validators. We don't have validators. We're a layer 2. We will run validators on all of the layer 1s we support. Validators, backup validators, query nodes, archive nodes, testnet nodes, IBC relayers for everything. We have a bunch of hardware going on. But for our network, you don't run a node on us. As far as sending staked assets, we were actually building this out assuming that wasn't possible, and had a bunch of really complicated stuff worked up to in order to still pay people while they unbonded. And then we found out that Cosmos is just building a CosmWasm wide staking derivative module that will allow you to send your staked Osmo directly to like our validator, which mints your SH Osmo or Osmo.
Yeah, that's going to be really cool, too, when that comes out. Bell, please carry on.
All right, Sylvicore, who is we? Who makes that 200 million?
The DAO, the people who hold the DRO token, and it's broken down to 60% going into protocol-owned liquidity, which means our DAO will literally be invested in all of the layer 1s we support, and it will be our job to be a VC partner and make sure that these layer 1s succeed long-term because we're invested in them. 20% will go to our L1 farms where you stake DRO, you earn Osmo, you stake DRO, you earn Atom, you stake DRO, you earn Secret, and 20% will go to buy back and burn the DRO token. So if we had $230 million of revenue, then you're looking at $46 million literally going to buy and burn our token, plus 100% of the 0.20% fees on our hydro pools.
I gotta. I'll let you have it, Bell. But I did get a question on that, man. What's your max cap on DRO? Are you going with a controlled fiat model, a la kind of what Jackal's doing? Because I think this is going to be the new thing you're starting to see in crypto. So are you guys going with a max cap, or are you guys going the not? We'll call it bonded fiat. So are you guys going that route?
Neither. Neither of them make any sense for an AMM. And that's why Osmo has a specific shelf life. And Sunny Agrawal is brilliant, and they are going to completely redo their tokenomics. They have to. It's the only way they can succeed. They have to. Yes. And we're going to show them the proper way to do it, but they'd have to relaunch everything. So, we are going with set layer 2 inflation. That's one of the reasons we prefer layer 2 to layer 1. That means our inflation does not go up as the supply goes up. We have a flat amount of tokens per block. I think it's 69 tokens per block. So
it's good. I understand it, man. We'll break it down, but it's a controlled model. So, no, I understand. Yeah, you can do it.
It's inflation with counter deflation. And then we can turn inflation off when we want to.
Yeah, so it's a controlled model.
Okay.
No, I'm asking you, man. You tell me. How would you term it nice and simply for everybody out here in the audience right now?
Counterinflationary.
Okay, that's a lot easier. I'm putting you back on here, dude. I'm going to smack you around. Belle, please take it away.
All right. Well, Old Man dropped a comment that I found pretty amusing. DRO token sounds like a weed token.
Is it a weed token, Eric? Do you smoke the pot? Are you a pothead?
What? Wait, is there a connection with dro and hydroponics? God, that's completely novel to me.
There could be. Yeah, that's why you mentioned it. None of us did. Belle, please take it away.
All right. Two people asked this question, but Flyabus and Master, why hydro and not SIF chain?
I mean, why not both? Why not stake dro to earn Rowan?
Yep. You know what? I'm sorry. I'm going to cut in on this one, Belle. I'll give it back to Eric. I know this is here for his show. Look, guys, I talk about diversification. I do it a lot. There's a reason that we diversify. All right. There's a reason that you don't have all those eggs in one basket, because if you trip and drop the basket, you're just bust. There is a reason that I am out on Cosmos, that I'm on Terra, that I'm on ADA. There's a reason that my money is spread around. There does not have to be only one. All right. This is not Highlander crypto. There can be many elements that are all profitable and supportable. And it is in your financial interest. This is a Podcast University plug, by the way. It is in your financial interest to diversify. Eric, do you own crypto? Do you invest in crypto?
Yeah.
All right. Is all of your crypto in one single product? And let's just say it's the product that you yourself control. Is all of your money in there?
Almost.
Almost. Oh, God. Hey, you know what? That was a good question, Bill. All right. So throw out everything that I said. All right.
No,
Put it all in CFI and just hope for the best, man. That's what Eric just said. You know why he looks
right. We're going to make our entire protocol diversify.
Yes, you want to be diversified. So there is no problem putting some in SIF chain and some in Hydro. There's no issue. In fact, I encourage it. Belle, please take it away.
All right, Carnthus. Oh boy, this one's a good one. So if ILP with Hydro for Jackal, you take that and stake directly on Jackal to earn treasury for Hydro DAO. Where do I make money, and what happens when staking rewards go down over time?
Yeah, staking rewards go down, APRs go down. Well,
they do.
APR, the inflation the DAO captures goes down, so the APRs for the farms will go down. The price of DRO is what determines the APR already, which is the case on Secret Swap. If you see like, oh, this has 42% APR, like that's just based on the price of CFI. So if you're buying CFI, that APR goes up. So we're codifying the buying process. But yeah, 100% DAO keeps the Jackal, which is staked, securing that network. It also gives you voting power through private governance on all the layer ones we support.
Take it away, Bob.
All right, Carnthus again. Okay, so where is this revenue going to come from if fees aren't enough?
Staking rewards from all the layer ones we support. We're on a proof of stake network.
All right, next question is a very, very generic one from Limon. What is frontier osmosis?
Oh, go ahead, Eric. You can go, and then I'll go.
Frontier osmosis is getting so big that it's difficult for users to find everything that they offer. And so Frontier is a way of them still having the bulk main site that people can use if they just want, I guess, the normal assets. And Frontier is allowing all of the new types of synthetics and new protocols that seems like there's 5 coming out every single day, allowing all of them to be available without cluttering up their user interface.
Yeah, and I did a video a couple days ago. Do you see that injective protocol is showing up over there on Frontier? Yeah. Is injective protocol enabled in the Kepler wallet?
I have not looked into injective yet. I've just heard
it is not. Let me stop you. It is not. I actually got some hateful comments. I'm sure Belle will read it because I was one of those how dare you speak ill of it. If you go over to, you know what, I'll just show you guys. So we're in third screen right now where everybody can see us. So let's go right. I thought this was funny as hell. So if you come over here to Frontier Osmosis and you go to assets, there's a lot of assets that you're going to find over here. Oh my, dude, they just added Axelar. So Axelar, AX, USDT, Frax, there's DAI, there's USDC. So yeah, they a lot of these other ones are showing up here. They're not going to show up over in regular osmosis. So let's take Axelar, for example, and they're a link to Satellite by Axelar. So typically, most of these over here, Juno Rack, Juno Hope, Cerebus, Carbon, if you hit the button, then it's going to request a connection to your wallet, directly to your Kepler wallet. And you can go ahead and manipulate it directly here in Osmosis. So the first one I saw that didn't do that was right here, Injective. So if you hit deposit, it sends you over to their hub. It links you over to the Injective chain bridge so that you can manipulate anything that you want over here. But To send it back, you're going to have to transfer it back into Osmosis to send it back over to here, back over to Osmosis Frontier, so you can actually do something with it. It's a hyperlink. That's all it is. So it pulls you off from Osmosis, sends you over to their decks. I thought that was hilarious. I really did. So Osmosis Frontier is, in fact, permissionless. Eric, do I have that right? Is Osmosis Frontier permissionless?
So I've been told.
Yeah. So what would stop me from putting in the podcasts and you click that deposit button and it sends you over to YouTube to that Rick Astley video? What would stop me from doing that? Because it is, in fact,
great.
wouldn't I? Thank you. I thought that was funny as hell, but nobody backed me up on this because, crypto is serious business. Getting rickrolled on Osmosis Frontier, I think would be just a panic. And I got a front end guy that was, I wanted him to do it, man, but I think they're going to stop it before that could happen. But yeah, that's what's happening over here. So you're not going to see any of these tokens over here from Juno Rack pretty much all the way down to the bottom. You're not going to see them on standard Osmosis, and we'll just show you regular Osmosis. And here it is. It stops right there with Carbon, all right? So none of those other tokens are on there. I think the thing that's probably going to slam this more than anything else is Juno, all right? Because it is, in fact, the wildest of the Wild West, a permissionless network that's tied to Osmo. So anything that goes up on Juno can get rolled over here to Osmosis, and that's going to be a problem. They have gotten some doggiest of dog tokens that have ended up over here, and that seems to be the way that they're going to clean it up is Osmosis Frontier. So I think the wildest of the Wild West is very, very apt for that one. I'm sorry, guys. I went to roll, but I thought this was funny. Belle, please carry on.
All right, Master. When is Hydro going live?
There you go, Eric.
Token launch Q2, product launch Q3.
Are you going to airdrop some? Are you going to give some away?
Absolutely. Let's airdrop to Secret Luna and Adam.
Secret Luna and Adam. Ladies and gentlemen, are you going to have minimums or anything that's in there?
Yes, we will have minimums. I'm not exactly sure what they are, though.
Okay, well, do the math, get it out, because we want to tell our folks. So yeah, there you go,
we're
guys.
We're probably gonna bum some data from our full-on partners, which is Secret Labs. There's a joint venture between our team, High Vault, and Secret Labs, the core development team of Secret Network. So
okay, well, there you go. Belle, please carry on.
Carthus, Eric, what is going to be the conversion rate of CFI to Dro?
I know it, but I can't answer it yet.
Dude, you came on, you asked us, all right? You got to give me something special here, dude. Look, nobody's watching. We have like 2 viewers, all right? Nobody's going to hear it. I'll take the video down. What's going to be the conversion rate of CFI to Dro on
it's such an arbitrary
launch?
question that people don't recognize. What if I made the supply 10 and I'm like, oh, you're converting at like 1 to like 0.0001? Or what if I make the supply like 100 billion? I'm like, yeah, it's a 1-to-1 like transition. Aren't you stoked? It's 1-to-2 transition.
So you're saying the supply is 1 billion. That's what you're saying. Or you're saying
exactly
the supply is 10. That's what you're saying, man. Dude, you know what this show is about before you came on. Belle, please carry on.
All right, Sylvicore, LPs or just staking?
The airdrop will be to staked tokens. And then other than that, if you want Dro, buy CFI. You burn CFI into Dro, as well as once we pass governance saying that we will like agree to have Hydro be the replacement for Secret Swap, we get to keep all the stuff and route the domain over to Hydro and then maintain the page so that people can still claim their old liquidity. Once we pass governance for that, we will also add Dro to the Infinity Pool in a pretty substantial amount. So stake CFI in the Infinity Pool to earn CFI, Alter, potentially Jackal, and Dro, and maybe something else as well. And then when it's time to migrate everything to Hydro Finance, pull it out of the Infinity Pool, migrate over.
So you're not going to do a special airdrop to CFI stakers?
You can't.
Why?
Because CFI is private.
Well, dude, I'll tell you. I'll send you an email. Come on. Got no problem with that, dude. I show my wallets constantly, man. It's not like I keep any secrets here. My wallets are splashed all over YouTube.
Adding to the Infinity Pool is pretty much an airdrop to CFI.
Okay, well, there we go. Belle, please carry on.
All right, Jason B with a generic question. Am I crazy for wanting to swap 7 Sol and 5 Ave for Atom to send a SIF chain to Rowan Juno LP pool for 300% APR?
Nope, I'm taking this one. Eric, I don't care if you disagree. I'm absolutely right on this. There is simply, at this time, from a pragmatic standpoint, there is absolutely no better investment in crypto right now than that pool. I've done a very specific video. I don't get that it actually got a lot of views for us. I did a very specific video on this. The math works. Based on what it is, based on the strength of Rowan right now, there is simply no better pool. There is no better investment in crypto right now than Rowan USDC. You're LPing with an exceptionally strong organic growth token and a stable token, and you are getting 300% on it. There is no better investment in that. No, sir, I don't think you're crazy. However, we're going to go to the front page so everybody can see the big splash that says, this is not financial advice. But I show my wallets all the time, and I can tell you for an absolute fact with no shame whatsoever that the bulk of my money is sitting right there because it's a good investment. I'm just going to put it right there. In my opinion, for Scott, for me, it's a good investment. For me, I don't know your situation. Belle, please carry on.
Mark Bailey dropping in with a comment. Love your show, guys, especially the live. Keep up the good stuff.
Wow, we never just get a happy comment. Somebody's always beating the hell out of us. Oh, and by the way, we haven't gotten a single tip tonight. Look, guys, the money does not. We'll third screen this one. Look, the money doesn't go to me. All right, this is my YouTube wallet. This isn't even my personal wallet, man. This is my fun money. The money doesn't go to me, but I don't pay Belle. You pay Belle. So if you like having a show with an actual producer, help her out because this is all the money she makes for this. Belle,
ooh.
What?
And there's a note to add on to that. I have an RNS.
You have an RNS?
Nice.
I'll be down.
I do. It's Bella.RNS.
Why don't you type it into the chat? Maybe somebody will send you some dough. Eric, do you have an RNS?
No, but I really want a couple.
Dude, you have disappointed. Oh, my God, you disappointed.
I sold all my Juno. Now I'm like, I have to buy Juno for it.
No, I don't want to buy Juno. I had enough. I own like 8 RNSs. The big one is the podcast.RNS. But I started buying NFL teams because you never know, man. Yes. I got the Denver Broncos, the Atlanta Falcons, the Dallas Cowboys. You never know, man. It costs like $4. All right, they're good for a couple of years. Who cares? So we all don't know what the future is, man. So yeah, we buy up the RNSs. Belle, please carry on.
All right, Master. Scott, can you explain PMTP protocol for SIF chain?
No, but what I can. But guys, look, this isn't my product. All right, this is SIF chain. Now, what we did do is we went out and got you Casey from SIF chain, the man who is got his hands knee deep in all of this stuff, and it's not that I don't want to talk him up, man, but I don't want to talk over somebody. So when we went out and got the guy who can explain every single little nuance of it, I don't want to muddy the waters. I don't want to muddy it up before we actually have him on the show. So please save this question. Casey's going to be with us. We just had, who'd you have, Eric? You had Nick, right?
Yeah, I had Nick.
Yeah. So Eric just had Nick. We're getting Casey. And I would love you to save your SIF chain questions for the people who built it. That's really all it comes down to. So, Belle, please carry on.
All right. Donnie G, is that third reward slot in the Infinity Pool reserved for Jackal?
Boy, that's your question, Eric.
It's reserved for whoever lists first between them and a bunch of other people. So
who are the bunch of other people?
We'll see who commits.
No, come on, man. You got to give me something. You're talking to people, dude.
I mean, it was supposed to be Shade. We had an agreement, and then it wasn't, so we'll see.
Yeah, Shade kind of bent you guys over there a little bit, man. Belle, please carry on, or we're going to go to comments.
Carnthus, serious question. Why White Whale at 19.6% versus Terra Native Anchor at 19.49%?
Let me make sure that my information was correct. So, as I said, guys, I'm a big fan of White Whale Protocol, all right? It's very, very, very simple to get money over here. So, I'm looking at Carnthus. If you can see my third screen right now, you can see that White Whale UST on the app.whitewhale.money is sitting at 19.67% plus 0.1% for the Vault APR for a grand total of 19.77% APR. Now, what the other one is doing? Sorry, guys. I'm not speaking on the other product. I'm simply speaking on this one. You guys can see the same screen that I can see, and that is 19.67% plus 0.1% for a grand total of 19.77% APR on White Whale for the Anchor APY. So I hope that answered the question. Belle, please carry on.
And Carnthus, okay, apparently, Eric, it is not your week for being told to put up or shut up. Carnthus dropped a $5 super chat and told you he dares you to double this.
Okay.
They want you to send money. Dude, aren't you like a millionaire now? Don't you have like just stupid amounts of money?
No.
No, I know you do, dude. I know you're doing all right.
I'm doing all right. I'm not a millionaire. But
you're talking about your $200 million that you guys are going to be pulling down on the Dow next year.
We will be.
At
that point, I will be.
All right.
I did not say earning that next year. If we get Osmosis's liquidity day one, I'll be very happy.
Okay, I want you to sponsor the podcast. Will you do that when you hit your big nut? So I could put your icon sitting right here. Are you going to sponsor the podcast? Gladly. All right, Belle, you've heard it. Take it up with him. All right, Belle, do we got any more questions? Anything serious, or can we get to some fun stuff? Because fun stuff is always fun.
All right. Well, Carnthus actually, his question did continue asking, are there tax implications that make either a no-brainer? Currently, I see no reason to switch for 0.11%.
Are you talking about for the Anchor
White
APY
Whale.
or White Whale? Dude, I don't know, man. You know that's an Emery thing, dude. It's not like he's probably sitting right next to you. Can't you just look over to Emery and ask him? Dude, the Jackal, they had the snapshot. Emery's going nuts right now, but I promise you he'll answer anything in the Discord. All right, we got anything else, Belle, or are we going to get to comments?
We've got one more from Shane Hamilton. Who here has the most lucrative RNS? Out of the three of us, I'd say probably you, Scott.
Oh, I think I have Jackal Group. I have Jackal Group, dude. So if they ever, yeah. I have jackalgroup.rns. So if they ever decide to expand, we got to talk. All right. We got to talk because it's pegged to my wallet. I tried so hard, man, but they had Jackal locked up before they even launched, dude. I mean, the second they said they launched, I'm up there going, Jackal. Oh, it's already taken. I was like, damn it. That would have been just wonderful. Man. You know what's not owned yet? And this is a little bit shocking to me. Flexa. Flexa.rns, I don't believe is owned. So
yeah. Carthus is chiming in saying, yeah, I own Jackal.rns.
Well, dude, you work for Jackal. You built the damn thing. You and Marston put your heads together. For anybody who's not familiar, RNS IBC service. So you're looking right here, rns.jackaldao.com. And you know what? I think I have a little bit. Let me see if I can buy Flexa. This is how it works, guys. The name you want to register. So Flexa. Oh, why don't I spell it right? Flexa.rns. I want it for a year. I don't know if I have enough Juno, 0.3125. Let me see if I got enough Juno. If not, I have to change it, and I don't want to. Hang on, guys. We're going to get there. I have 0.145 available. Balls! So we won't be, I'm not going to buy any more Juno for this one, man. Look, Flexa.rns is probably available. I think that would be funny. I think that would be just absolutely hysterical if I owned it. I think that would be funny. All right, Belle, you got any more serious questions, or we get to round this one out with comments?
We get to round this one out with comments, of course.
All right, so Eric, this is my life, dude, because you know I do videos. All right, my product is this channel. That's it. This is my product. So I try to diversify the videos that I'm doing. Now, the funny thing about YouTube is YouTube exists on confirmation bias. So if you dare to speak ill of anything that any maximalist loves, you're going to get absolutely hammered. So this is my everyday, dude. The comments are just a well of darkness for this channel. And Belle likes to scrub through. I don't read them. I look for the good ones and I'll answer them, but the negative ones, I leave them for Belle. So she goes and scrubs them, and we do it on the live stream. So, Eric, we invite you to take this journey through darkness with us. Belle, serve it up. What do we got?
All right. So the first one comes from Devin K 3 days ago on the Amp Flexa and Chipotle video.
Oh, no.
Finally hearing you speak positive about our baby Amp. You know what? Your baby's like it's a deformed creature. It's not growing. It's always going to be a baby at this rate.
All right, now I have to say this. Bella's comments here are not reflective of my personal opinion. Don't hammer me for this. Belle, please carry on.
All right. So, all right, Devin K. Empire on the Rowan USDC video. Empire, I see you with the swag.
Yeah. I wear the T-shirt, man. That's not exactly a bad comment, Belle. That's actually, I'm wearing a Flexa T-shirt. Why I did a Rowan video. I'm not a maximalist, all right? I will invest in anything that's profitable to me. Belle, carry on. Give me a good one.
All
Come
right.
on.
Oh, Grey Wolf Trucker. I blew my Amp out after I flexed my tummy with too much Chipotle.
Okay, that's funny. That is universally funny. Dude, I offered up an Osmo to anybody who gave us the best Amp Flexa Chipotle joke. So we already paid that out. Belle, please carry on.
All right. Chipotle news from Jammin' Jackson. Chipotle news came out. Price went down, just like the chicken burrito I ate.
So they went all day with this one, man.
Oh, yeah.
Carry on, Belle. Give me some.
This was just yesterday.
These are the
All
funny
right.
ones. Give me some darkness.
Sean Hunt on the Osmosis and Injective protocol. You are mistaken here. Injective has its own native chain that they built from the ground up. Finance will be transitioning from ERC20 tokens to Injective native chain next week. In fact, Injective protocol is a solid project.
Okay. I don't disagree with anything that you say on that one. Carry on, Belle.
All right. All right. So Amp Token and Flexa Network and Strike. Yeah, Adam David just chimes in first.
That's it.
Johnny,
That's the video.
yeah.
Give me some. Come on, Belle. Give me something good here.
I'm reading the comments and we're not getting a whole lot of good attacking ones. And CHBS Soluzone though. Absolutely strange and weak to make Inge look bad. They have absolutely class. And Kepler is coming, mate. Looks like you feel threatened by Inge with the real permissionless, truly decentralized decks. Really poor. How cocky. Bad karma.
How cocky, bad karma. Oh, go ahead, Eric. You want to answer it up, dude? This is my life, man.
That's cringe.
A little bit, man. A little bit. Look, I have no dog in this fight. All right. I don't care. Let me be real clear here. I don't care. I don't own any. I don't own any Injective. I don't care. I thought the fact that their link in Osmosis permissionless, I thought that was hysterical. That's all it is. Aside from that, I don't care. All right. Look, the DeFi is big. There is room for multiple products to exist and be successful in this massive space. The fact that there's already a DEX, which would suggest that Hydro is going to be a failure because a DEX already exists. I can't even begin to argue with that kind of idiocy, man. We're not speaking the same language. I hope Injective is wildly successful. I don't do a video on it because I don't own any of it. It would be extremely disingenuous of me to talk up a product that I don't own because we don't do that here. We don't tell you how to invest your money. We show you how we're investing ours. And if Eric's project works out and I own a whole bunch of Hydro, I promise you, I'm going to be showing you how I am profiting on Hydro. It has nothing to do with Eric. It has nothing to do with this. It's about money. Money. Not passion, not belief, not hopium. It's about money. And the one that earns me money is the one that gets my absolute devotion. Because that's called a symbiotic relationship. He needs my money to exist, and he's going to turn it into more money. That's all it is for me, guys. I just want to make sure we're real clear here. That's all it is for me, is who is going to earn me well, period. Eric, you want to add anything to that? Because I see your eyes rolling.
No, you're that's fair. A lot of people are in it for the tech. I'm in it for the game theory, but the users should be in it for the money.
We are investors. investors. And investment, you've got to put down the sunk cost bias. So many people are caught up in sunk cost bias. And immediately, look, man, that's a psychological condition. You will purposely overvalue the products that you were in and that you were down on because you spent time with them. The time you spend losing money doesn't make the product you own any more valuable. All right? It just means that you're stuck. So as soon as you can get your head around that maybe there's a better way, a different way, something else I should be looking at, until you can get to that point, I can't help you. Eric can't help you. This man is doing something that has never been done. It hasn't been done yet. And he can't help you either. Get your head right, and he can. I'm going to leave it right there. All right. So we're just about at our time, Eric. I can see you already drifting off. Suck it, dude. We go an hour here, all right? Not 37 minutes. So
you guys can't hear my daughter, right?
Nope, I can't hear a thing, man.
Sorry.
I take care of my audio.
Good.
I take care of the guests. All right, babe, you get the last 60 seconds, man. You're going to be the last. It's going to go to you, going to go to Bell, and then we're out. So last chance for a plug. You take it away, sir.
Awesome. Hydro, first AMM with external revenue. It's going to be a lot. If you've used Secret Network, we're completely changing viewing keys. You only need one for the entire platform, which has built-in logs where you can get all your tax information directly on site. Really, the only barrier for institutional involvement in DeFi is liquidity, which we'll be earning our own. So stay tuned for our white paper. Go to hydro.finance, click the socials, join our Telegram and Discord. It is the next evolution of AMMs.
Man, I absolutely believe that. All right, Bell. Talk us up, talk us out.
All right. Well, again, ladies and gentlemen, as always, for those of you who joined us on this Saturday night live stream, we do sincerely appreciate each and every one of you guys. Thank you, as always, for the amazing questions. Now, if you guys have any comments, questions, concerns, hate mail, definitely shoot us an email. Hate mail for once. Come on, guys, send some to me. I never get any. Okay. So Bella at ThePodocasts.com and Scott at ThePodocasts.com. Again, we are going to be on our normal time on Thursday at 7 p.m. Central Standard Time this coming week. And again, on Saturday, also at 7 p.m. Central Standard Time. I have to spell this out for some people because they don't read the time on the thumbnails and get all kinds of confused.
He always does that.
That is Leanson, by the way. Now, again, we do appreciate each and every one of you guys for being here with us tonight, and we will see you next time.
We are dropping new videos and podcasts every Sunday, Tuesday, and Thursday. And be sure to look for us on Instagram, Twitter, and Parler at The Podocasts. Also, visit our page at ThePodocasts.com, all one word, for all of our most current content.